The challenges that warrant the ECB's current policy have not disappeared. The euro area economy faces some near-term risks, mainly related to external factors, we can discuss that, and inflation remains persistently too low and certainly below the objective. I therefore agree with the view of the Governing Council that a highly accommodative policy is warranted for a prolonged period of time in order to bring inflation back to the famous below but close to 2%. But there are also some important questions on the horizon that monetary policy will need to address. First, though the impact of unconventional policies continue to be net positive, we need to be mindful of the negative effects and the potential side effects of those policies, and we have to take the concerns of the people into account. While remaining committed to our price stability mandate, this requires continuous monitoring and a very careful cost-benefit analysis as is conducted currently by the Governing Council. Second, the global environment of low inflation and low interest rates poses strategic questions for all central banks. It's not just the ECB. The central banks need to enhance their understanding of inflation dynamics, take stock of new instruments activated to contain the crisis, including the use of balance sheets and unconventional monetary policies. And they need to reflect on whether their monetary policy frameworks are sufficient and sufficiently robust to future challenges. This is a task that I intend to embark upon and to join if organized on a broader basis. Third, central banks are increasingly facing new types of challenges, not least related to climate change, to the disruptive impact of technological change, to the potential fragmentation of the current multilateral order. And here I see it as crucial that monetary policy is forward-looking and considers the broader context in which price stability, its mandate, is achieved. Ultimately, the effectiveness of our monetary policy hinges on the resilience of the financial system. The ECB's role in financial stability has expanded significantly in response to the challenges that emerged during the crisis. It has been asked to embrace new responsibilities for macroprudential policy and to host the new European banking supervisor, whom I understand you heard just before me. Supervision has done an effective job in strengthening capital buffers and reducing risks on balance sheets of banks. Common equity tier 1 ratios have risen from 11% at the end of 2014 to now 14% in 2018. The stock of non-performing loans, more work to be done, I hear, of most significant banks has now halved in that period of time.